Okay, does the stock market affect the real estate market? I'm Dale Mancini.
And I'm Marilyn Dale.
And we're your property couple, realtors with Keller Williams Realty. We'll get into more detail in the video, and it starts right now. But first, please hit the subscribe button and the thumbs up button below. We record a video every Monday.
Most everyone remembers the crash of 2008. So what happened in 2008? What happened was that too many people had taken on loans they couldn't afford. Lenders relaxed their strict lending standards to extend credit to people who were less than qualified. This drove up housing prices to levels that many could not otherwise afford. So, by the fall of 2008, borrowers were defaulting on subprime mortgages in high numbers, causing turmoil in the financial markets, the collapse of the stock market, and the ensuing global Great Recession. This is not currently happening in 2021.
Okay, historically, although not always, when stocks go down, bonds rise and vice versa. When bonds rise, their interest rates fall. But the relationship of the stock market to the real estate market is somewhat less direct. In the end, you simply need to rely on the facts that real estate is an appreciating asset. So, even if the stock market does adversely impact the housing market, the downswing is only temporary.
Well, in the spring of 2020, the global pandemic shattered the world order and the U.S. economy suffered its biggest blow since the Great Depression in the second quarter of 2020. It put the housing market on hold for several months last spring. Even with rising mortgage rates and higher prices, economists say the housing market should remain strong due to very tight inventories and increasing demand as more millennials are projected to buy houses this year.
The housing market still is very strong. Also, fewer people are moving from smaller starter homes into larger properties post-recession. Consequently, inventory is tight and it's easy to get into a bidding war that can drive up prices. By the way, last week we did a video on how to win during a bidding war. Please be sure to check it out.
The real estate market has been struggling to keep up with the demand for the past decade. The pandemic has led to a surge in demand. The median sale price of a home has risen 16% from last year, and they have increased even more in some regions of the country, like Northeast and West, which are both up 21% from last year. The inventory of home for sales declined by about 30% annually in February of 2021, which is a record drop.
There are reasons to believe that the housing market will remain tight in 2021 because there are first-time buyers, the millennials, who are coming into the market. About 4.8 million millennials are turning 30 this year and will continue to do so for the next 3 years, a significant positive force for the economy and the housing. The main challenge for the market is meeting this upsurge in demand with a declining supply of listed homes.
Hope this helps shed some light for you on the real estate market. As you can see, we are in a strong real estate market which has not been affected by the stock market. Interest rates are still historically low. So if you have any real estate questions, we would be happy to answer them for you. You can leave a comment below or call.
Again, I'm Dale Mancini.
And I am Marilyn Dale.
And we are your property couple, real estate agents with Keller Williams Realty. Be sure to watch our video on how to win a real estate bidding war. And please hit the subscribe and the thumbs up button below.
Thank you for watching.